Bitcoin is not an investment. However, that might be how you and many others look at it when they first get into it. They think about buying some of this thing, Bitcoin, and hoping that the price goes up by the time they want to trade it back for fiat, which is what people do with investments. They buy investments hoping the value of that investment goes up so that they can exchange it for goods and services later when they need to. But Bitcoin is a money protocol. It is not built like a traditional investments. Of course, we're looking at a definition here. You could think of anything that you buy as an investment, and most of those things would just be bad investments because they would go down in value over time. But I'm thinking and comparing it to traditional types of investments that people would make. So stocks, bonds, real estate, even precious metals, these kind of things. Those are different than Bitcoin. Bitcoin is a financial protocol and a unit that has a cost of production and a built-in scarcity to it, and many other properties that make it unique and sound and hard as money. Bitcoin's adoption cycle will follow the curve of whatever is the most useful to use Bitcoin as. So at a certain point in Bitcoin's past, it was much more used as a peer-to-peer digital currency with the ability to be anonymous. So just right there, the use case, you could go down the road of looking at Silk Road or WikiLeaks or these kind of use cases of having a financial protocol on top of the internet in that way. However, the use case of Bitcoin is not stagnant. It is developing over time, and it is based on the subjective user and how they find it useful. So right now we are in a stage of store of value, of describing Bitcoin as digital gold, as a good investment to make, as part of a balanced portfolio. It has a good Sharpe ratio. It can be held as an asset on balance sheets to improve your collateral, to improve your financial standings over time. This is the way that it's being talked about and developed and used. So Bitcoin doesn't actually have to be transacted, and Bitcoin doesn't need to be sent back and forth to be useful. And that is why it's going into the store of value phase. Now, if you look at the use case of a store of value, you might think, okay, well, investments can be a store of value. But really, I think of investments more as speculation onto the future of what you think will happen within a given industry, within the essentially the demand for that asset that you're buying. If you think Nvidia stock will go up because of AI, because of chips, because of the future that's going into that we see happening, that's all well and great, but there has to be a buyer willing to buy a portion of that company at a given price that's higher than today. That's the way that works, right? What happens if there's a demographic shift? What happens if there's a competitive advantage from a different company? What happens if those shares are not in as much demand? The price of them goes down, and there ends up being a point in people's lives where they need to offload assets that they've acquired. Now, because Bitcoin is money, again, it is fundamentally different in this way. There are many people that still treat it as an investment, but I would, if I were you, try to look at it in this other way that feels maybe just slightly different, but it will change the way you behave with this tool of money. So instead of thinking of, okay, Bitcoin's going to go up and I can offload it for something, you can think of it as this will preserve my purchasing power. This is savings technology. So that's the difference, right? When you put money into your bank account and you get a 1%, 2% yield in a high interest savings account, you are not thinking of that as an investment. You're not speculating thinking, oh, I can put this here and earn this 2%, and that's going to be more valuable over time. You know exactly how much it's going to be more valuable by. It's by that 2%. And that nominal bias is actually tricking you because inflation and the debasement of currency is higher than that 2%. So you're not even treading water with a high yield savings account. But what you're looking at in that space is you're not putting your money at risk. You're not investing it into your savings account, or at least you don't think you're putting it at risk. In my opinion, you are putting it at risk, but that's besides the point. When you put your money into Bitcoin, when you trade your fiat dollars that you've worked for and you store it in Bitcoin, if you think of Bitcoin as a savings account, if you just think of it as money, I have traded my time and energy, I've gone to work, and there's this little middleman of acquiring fiat and then swapping that for Bitcoin. But if the fiat didn't exist and you actually got Bitcoin for your time and energy, you wouldn't think of that as an investment. That is a currency, that is money, right? So the switch from fiat to Bitcoin, it's not a speculative purchase of an investment that you think was going to go up in the future and you're going to trade it back down for dollars at a certain point. If you treat it that way, again, you can treat it as an investment, but it's not built like that. It's not built like that. It is built to go up in purchasing power. So right now we value Bitcoin based off of the denominator of US dollars. Now, we saw a recent spike in Bitcoin's price because the US dollar weakened. So it hit all-time highs in the US dollar before it hit it in many other currencies, which is atypical because usually the dollar stays relatively strong compared to other currencies. So what I'm getting at there, though, is that you're always pairing it. You're pairing the value of Bitcoin with something else. You're pairing it with US dollars, Canadian dollars, and really what you should be pairing it to is what you purchase. Is a house getting cheaper in Bitcoin? Is ribeye getting cheaper in Bitcoin? Is a car getting cheaper in Bitcoin? These things that are very valuable that you need as a human in society. And when it does, you recognize that it has worked as a savings vehicle. You're not speculating on Bitcoin having some sort of earnings report, the market perceiving it well. I mean, all of these things happen in the short term, but because Bitcoin fundamentally has the best properties of money, it will become money. There's a quote by the late, great Charlie Munger, who actually also quoted that Bitcoin was rat poison squared. He said, "Show me the incentive and I will show you the outcome." The incentives of all the individuals in the world is to preserve their purchasing power, their time and money, their time and energy. They plan and hope to store it into the future so that they can use it when they need it. And that is exactly what Bitcoin is built for. Bitcoin is perfect hard money. Now you can argue about, will it be able to scale up for the transactions of the entire world? You can argue about if layer 2 through Lightning or through Liquid or sidechain or eCash, the centralization, trade-offs, all of this. You can argue that all the way until the cows come home, but you cannot argue that because of Bitcoin's decentralized nature through the miners, the nodes, and the developers, the 3 layers of consensus, that Bitcoin is not the most secure. It is the most secure. It is 100% the most secure financial protocol. It has the most transparency, the most decentralization, the highest hash rate protecting it, and the best Lindy effect. It is here to stay, and it is here to protect your purchasing power into the future. That's exactly what it is built to do. And you can say, okay, well, then it's failed as peer-to-peer digital cash. I think personally that we have yet to see it succeed in that use case because that use case is not in severe demand today. And I think that it is in demand to some degree in layers, in a layer 2, in Bitcoin, in Lightning. Lightning payments work excellently. There are trade-offs. There is going to be trade-offs. If you listen to somebody else talk about some other sort of competitor financial protocol thing, they will not talk about the trade-offs. But those trade-offs are there and they're glaringly large. And you recognize, and once you recognize the significance of these trade-offs, you realize that they don't compete on the secure and decentralized nature that Bitcoin excels on. And those two are the most important to build upon. You have to have a foundation that is strong to build upon. If you build upon a foundation that is weak, if you try to pile too many things on top of a weak foundation, it collapses, right? You can only pile so much garbage into a big stack before it tumbles down and we have a garbage avalanche. And that is what we see with a lot of crypto that pretends to compete against Bitcoin, is we see the collapsing and avalanches of garbage. Now you might be thinking it sounds kind of dumb to be saying that, Bitcoin is savings technology. It implies that there's no risk that there's going to be increased purchasing power. And I think that we need to talk, of course, about volatility. Short-term volatility is absolutely true with Bitcoin, and that's because of where, again, we are and the use case of Bitcoin as well. So Bitcoin is currently being used by traders, by short-term speculators. They are finding a use case within Bitcoin. It being basically calling the bluff of money printing more than anything else. That's why it runs up with M2 money supply more than anything else. It's very correlated to that. And so with that, you think, okay, well, that doesn't sound like savings technology. That sounds like speculation. That sounds like something that would have risk in it. And that if it was my savings, if I needed to pull the value of that savings out, that I would have less purchasing power. And that is the only real risk of Bitcoin that I see personally. Other people can say they see other ones. To me, the biggest risk with Bitcoin is volatility risk. And volatility isn't necessarily a risk. It's only a risk if you have a short time horizon, which means that you're only going to be holding this money for a short amount of time. So what we can kind of see here is there may be better instruments to hold money for a very short amount of time. But for any duration longer than, say, a couple of months, Bitcoin is your savings account. It's just kind of like how you have a checking account and a savings account. You could think of your checking account being the currency that people are willing to accept more broadly today. And you know that the value of that currency is being systematically eroded, the value of it. And you know the value of Bitcoin is systematically being grown because of the way it's designed. So if you have extra money in your checking account, what do you do with it? You don't go buy a new piece of furniture, a new piece of art, whatever. You take that extra money and you put it in your savings account so that you can grow your nest egg and you could buy and do things that are really important to you. Not frivolous, not going out for dinner, these kind of small things, which, you can do in some sort of moderation, of course, but there's a point where your income is more than your expenses and you're able to start saving. And when you do, your step should be saving. It should not be speculating, right? You shouldn't immediately go from checking account to portfolio to investing in companies with operational risk and all these kind of things. It should be building that savings account, the nest egg of cold storage Bitcoin that is absolutely secure, that is protected by cryptography, and that you have the sole ownership to, and you've secured it in the proper way. And then beyond that, once you feel like you have enough savings, that is when you can start investing. And to me, the only thing worth investing in is a company that is going to grow the amount of Bitcoin that it has and the amount of acquisition of Bitcoin that it does into the future. Those are the two metrics, because that is money, and every other company that is not doing that, they are acquiring and building something that is not real. They're living in fiat land. They're not getting more Bitcoin. They're only going to get less because it's going to take them longer and longer to adopt the idea that Bitcoin is money, and that is what they should be acquiring and pricing and valuing everything in. So once you have your savings, that's when you start looking into investing. So build your savings is what I'm talking about here. Look at Bitcoin as savings. Understand that it is built to be savings, that is built to be a store of value, and that all the other use cases around money will develop and grow over time as those use cases become more and more important. Bitcoin can not only just be a store of value, it has to, and luckily it can, become all the other things that money is: a unit of account, a medium of exchange. So hopefully this was interesting to you. And again, if you wanted to get some Bitcoin, I recommend checking out Bitcoin Well. It's where I buy all my Bitcoin. They send your Bitcoin directly to cold storage. They never hold it for you, so you don't open yourself up to risks like FTX and all of that. They have non-KYC options available for Canadians. They're available in the States as well, and you can get free Bitcoin for signing up. I also recommend checking out the other links that I have as well. I have links for a hardware wallet, the Jade. It's a great hardware wallet. I have links for the Start9, which is a way to run your own Bitcoin node, and you can get 5% off using my code. And I have a 15% off code for the Stampseed kit, which is a really good way to preserve your seed phrase, which is your private key, which protects all your Bitcoin for future generations. So check those links out. Goes to support the show. Thanks everyone for watching, and we'll see you on the next episode of Bitcoin, Not Crypto.